Mic check 1 2 1 2. It's your boy and Billy. So today 9:30 to 12. Let's see what type of price action we're getting. So 9:30. Well, let's just start down here. Market literally just we sweep out this low right here at 148 and 143 in the morning, and we come up bullish order flow, right? So now we sweep out this high right here with speed. So obviously we're deep in a premium. We got this new day opening, this new week opening gap down here, right? We have no significant sell side liquidity, so we're deep in a premium. So that's why I'm expecting it to be a bearish day because yesterday we did not return to that new week opening gap. So I'm expecting today we could get a return, and we just left some. We got these double lows. We got a lot of sell side liquidity. But anyways, so that's why I'm expecting it to manipulate up to go down. So that's what I was expecting, but I really didn't get no clean order flow to go short. Right? So I thought the macro, the 1050 to 1010 macro, the 1050 to 1110 macro would give us some speed to the downside, right? But as you see here, it's still in this range here. So we have a between two short-term highs, we have an intermediate-term high. You see how it do not get taken out, and then we trade lower. So I'm expecting this to be actually the high of the day because I'm expecting it to be bearish. So as you see here, we come up. Let's break this down. See here, we open here, we come up, we come down, sweeping out this low, come back up. You see how a little bit of high resistance. High resistance is basically when they're just going back and forth, right? You're going back and forth, right? Back and forth. You don't want to trade in a high resistance market, right? You want to trade in a low resistance market. If I say would you trade this? If I'm just clone this, right? And I'd be like, okay, would you trade this? You will most likely say no. Why? Because we have a lot of just back and forth, right? We got a low, high, low, high, low, high. Consolidation, consolidation, goes low, come back up. So you see it's not respecting no P to raise, it's not respecting no inefficiencies. Really, right? It's literally just going back and forth, back and forth. We do get a little move down, but it's not clean because we got consolidation, no fair value gaps, right? It's just, a little bit of a high resistance. So no trade for me right now, right? No trade. So hopefully we could get an SMT with ES and NQ right here, right? Because I really don't think ES. Let's see. Let's see, because from yesterday, I took my loss yesterday, so I'm just working on being way more patient and way more really just not experiencing FOMO, right? Okay, so we do got the SMT. So let's see. All right. And it's perfect because it's in the time of the macro. So we still got, what, 7 more minutes to the macro. See if we could catch this play right here. So after the SMT, which is one creates a lower. So you see how ES created a lower high, and then NQ created a higher high. So that's a and we have this short term, intermediate term, another short term at the top of us. So that's why I'm expecting it to actually go lower. So now I'm just waiting for a inverse fair value gap to get created. We do not have no fair value gap and no nice fair value gap. I like to actually these small little fair value gaps right here. I don't really look at those, right? Yeah, I really don't. So I'm waiting for a good inverse fair value gap coupled with a change in the state. So these series of Buddhist candles right here is one change in the state right here. So you see how it didn't. You want to see it close below the low. So until it close below the low, you do not have a change in the state. So this is the part where you want to be patient and disciplined. So we are in a time of a macro where we kind of like should see some speed. Because I really want to get a return back to that new day, that new week opening gap. But at least to the midnight open, and we'll see where we go from here. And we got a high, low, higher high. It'll be nice once we close below the here. Now we got a bearish breaker also, so we have a lot of things leading to the downside. And we're still deep in a premium. So your best shorts comes in when you're above equilibrium, which you're in the 50% range. And my trading window is at 12. My trading window finishes at 12, so I got about, what, 45, 44 more minutes to catch a trade. So yesterday I took two small losses. I think one was like 22 points. The other one was for about like 25 points. Right? Remember, there's four key elements to be a profitable day trader. Right? So the first one is you need patience. You have to master patience. The second one you want to master is you want to master discipline, right? So you have to have patience to wait for the right things to align, just like we're waiting for the right things to align right now. The second thing you need is discipline. You want to be disciplined, right, to the things that you're looking to be disciplined to, right? Whether that's you want to be disciplined to your stop loss, you want to be disciplined to your trades, how many trades you take per day. You want to be disciplined to your routine. You want to be disciplined to your no trading on no news Mondays or whatever like that, right? You got to be disciplined. Those are the main two factors. Patience and discipline are the main two factors, right? It's something that you're going to constantly struggle with every single day. Every single day you got to be disciplined, and every single day you got to be patient, right? But you don't want to be too patient. You know what I'm saying? So, and then the third thing is risk management, which is one of the most important things. They're all extremely vital, right? But risk management is how you actually stay in the game, because if you don't know how to risk your trades properly, you can over leverage and you could basically trade with more money than you expecting to, and then you can end up blowing your account because of lack of proper risk management. Right? It's something that I ain't really realized till like later in my career, that damn, it's about becoming a good loser. Right? It's about who loses the best, right? Because in this game, everybody is going to lose, right? Anybody who tell you that they don't really lose that much, they're lying to you, right? Well, not lose that much, but everybody who's saying that they don't lose in trading, they're lying to you, right? Everybody trades. Just like the fourth thing, right? So you got patience, discipline, risk management, and the last thing, which is not really the most important, but it is kind of important, but it's the least important of all of the other ones, which is your strategy. What strategy are you using to enter into the market, right? Like, what strategy, right? So, like right now, this strategy right now I'm using right now, is the S&T changing the state inverse fair value gap, which is called the forever model. All right. So that's the strategy that I'm using. I have two strategies that I use. So you want to have your strategy, because your strategy, it brings you consistent, like you're not second guessing on everything, right? You're just like with a jump shot, right? You don't change your jump shot, right? You have the same jump shot. The only thing you change is maybe you may be fading away, or you may be jumping higher, but it's the same jump shot. Right, this is the strategy. Same jump shot. So I use the same strategy, same two strategies. So that's the four key elements of being a profitable day trader: patience, risk management, discipline, risk ma- patience, risk management, discipline, and a high quality setup. And then you got to understand the market literally moves. The market does four things at all times, right? The market literally generates the highs and lows, right? Like this. See how the market literally at all time is doing this. It's generating these lows at all time. It's generating these lows, right? Then it's generating these highs, right? Then it generate these highs, right? So the market is constantly generating liquidity on either end, right? Then the second thing the market does is it hunts the highs and low. It hunts the liquidity. So you see how it came here. You see how none of these lows have been taken out. You see how none of these highs have been taken out, right? Except for this one. But it just focused on the main highs. None of these highs are been taken out. None of these lows. None of these lows have been taken out because the market is constantly generating liquidity to go hunt it. So basically it's creating the highs and lows to then eventually hunt it, to hunt the highs and lows, right? Which is your stop loss. It hunts the liquidity, which is your stop loss. And then so it hunts the highs and lows, so it creates the highs and lows, then it hunts the highs and lows, and then it rebalances, right? It rebalances to equilibrium. So if I just use this high to this low, look how it rebalances to equilibrium. Equilibrium is just the range that you're looking at. You saw how I draw the fib. I drew the fib from this high to this low. Look how it came right. It generated this low and it pulled right. You saw how it pulled back. You saw how it pulled right back to equilibrium, which is 50% of the range. See what I'm saying? That's the fourth. That's the third thing that market does it all the time. And then the fourth thing it does is that it actually rebalances to an inefficiency, and an inefficiency is a fair value gap. All right, so we got these two bullish candles. We got a change in the state right here. Well, this would be a fair value gap. I think I should. I think I like it. So we got both. I'm about to go short. Are we short? Stop losses at the S&T high. So we got a change in the state and we got an inverse fair value gap. Let's see. Risking 21 points. And then we do have this fair value gap right here. But I actually wanted to see this used as a breakaway gap. But it's a CB. I would love to see it used as a breakaway gap. It's basically so it would not get traded back into. Because if it trades deep into the upper half of this fair value gap and it comes into the change in state, first of all is disrespecting this inverse fair value gap, and then it's literally if I want to know if I'm on the right side of order flow, I want to make sure it leaves these breakaway gaps. That's how I know if I'm on the right side, right? If I want to see it leave breakaway gaps, and I want to see it stop at the lower half of inefficiencies. I don't want to see it come up to the upper half. So the fact that it actually came way up here, I did not like that. So that's already a sign of the play may not work. But one thing about the SMT play, these forever model plays, it kind of trades outside the lines a little bit. But you see how it comes up and respect this change in the state, aka order block. These two bullish candles with the aggressive close below, leaving a fair value gap, right? So that's a actually a good sign, right? That they respect. You see, look at the bodies, right? You have no bodies in the upper half of this change in state, only wicks, so that's a good thing. But this inefficiency, look at the body. The bodies are in the upper half. I kind of don't like that. But let's just see if this pick will work out. Kind of retrace back too far, but this is what it is. You can't be perfect. Every play not gonna be perfect. I mean, but so far I did like the rejection off of this level. Yesterday retraced back a little bit too far, but we have been getting a lot of high resistance trading today. So far still respecting things. I'm eating breakfast right now, so hold on. Yep. Not looking good. Most likely going to stop me out, but gotta commit to the trade. My stop loss is what? 21 points. With one contract, that's $40. Two contracts, what? $85, which you see here. It's not looking good. It's not looking good. I want to recreate it as another SMT with this high. Oh, we literally. Wait, did we? So this high here. Mm. All the bodies. Other bodies are closing below. You see below the change in the state, so that's a good thing. I always take partials at 50 points. See how it's constant. So this is ugly price action. See, this is the price action. This is a price action that you kind of really don't want to trade. Right? Look at all of this back and forth. Look at this. I mean, a big move is probably coming. I just hope I don't get stopped out before the move presents itself. Because I'm not pretty sure, but I feel like I am correct on the direction. So let's just see. Yeah, yeah, paint for Christmas. We got a high, low, high, high. We got a breaker. Once it close below here. Yep. And we got a change in the state right here. Right here. So if this right here, so we have the high, low, higher high, lower low. You would want to get the last down close candle, which would be here. Extend it. This is your bearish breaker. All right, bring my stop loss. All right, that's lovely. Ooh, on my phone. Dang. How did I know? How did I know? We swept out. Damn, we swept out this low right here. All right, so stop loss from the. Let me see. Hold on. Damn, I should have sold some when it got to right here. I didn't see it take out this low. Oh, that was only 30 points. That was a crazy retracement though. Stop loss at the top of the breaker. Above equilibrium of this should be also. Unfortunately, it came all the way back up, but that drop wasn't even a lot. That drop was it looked crazy. Look about it. Stop me out. Damn, that was a crazy expansion. But it's okay. It was a great play. I'm not upset about it at all. It's about my time for me to go anyway. So caught one trade today, ended up losing on this trade, but as you see, it delivered nicely. Got stopped off for like what it was, 100. No, I wasn't 141 because I was down $100 from 4 days ago. So for some reason, when you paper trade, it just adds the losses on top. It don't really. So I was down 111 yesterday. So that means 111 minus. So I only lost like $40. So good trade, good trade. I would have loved for it to kept going, right? You see that crazy retracement. Look how it took out. Look how it just so before I go. Look how it generated this low, right? Generated the low. 40 points. That's crazy. So it generated this low, generated a high, consolidate, 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 sweep. Look how it sweeps out the low and then just rallies back up. About to take out this high. high resistance market. You don't really want to trade when it's doing too much pulling back. But anyway, that was a great trade. Appreciate y'all for tuning in, and I'll catch you on the next one.